You were listening to chartingwealth.com for Tuesday, the 8th of March, 2016. We always start with IYY, and we always start with our two-day chart. We still see our two-day chart working for us. I'm redrawing my two-day trend line just to get it a little more accurate. We've got three good candles connected, which is what we like to see, three or more. The last three candles starting on the 1st of March, the 3rd, and then this 7th. And what we have is a crossover originally going over, moving up on the 16th of February. And we've continued to see massive up movements since then in the total market. Today, not up too much, just 0.06%. So 0.6%. Not a lot of upward movement, but still upward movement. If we look at from our two-day chart to our 4-hour chart, we see that the morning was pretty much a doji, a little bit of up movement in the afternoon, still well above the two-day trend line. It does appear that the up movement's getting rather long in the tooth, that we do see a converging, not a cross yet, of the MACD, the moving average divergence line, with the signal line, but we still have a pretty strong derivative oscillator, which is interesting at this point. Still above the two-day trend line. Let's just see what happens, but still confirmed up moves on the big and small charts for the total market. Next, range back to our two-day chart and take a look at SPY, which is a Standard & Poor's 500. That is up 0.08%, so 0.8%. Still have a nice strong trend line after the market crossed over, going up around the 16th. And if we look at our 4-hour chart, we see it too is long in the tooth. We had a doji, which again, for those of you who don't know what the Japanese candlestick patterns are, we're using a different type of candlestick here. This is not your standard candlestick. This is the Henkin Ashi, or Henkin Ashi, Heiken-ASHI. And it is a kind of candlestick. I encourage you to look it up on Investopedia, look it up on our website, chartingwealth.com. You'll find it rather interesting. It helps a lot in seeing movement better and stronger. I think if you just look back at our candlesticks on our charts, you will see that. If you're listening to us on iTunes and don't have the video, encourage you to go to our website, chartingwealth.com. Check out all the different trainings we have there on candlestick patterns, how to read a stock chart. And if you sign up for our daily newsletter, which is really just the audio and or video recording of what we do every day, our chart review, plus our weekly review and forecast, you'll receive how to read a stock chart video. 15 minutes of valuable information that'll put you on your way to being able to read the roadmap for the market, which truly is how to read a stock chart. Now, some of you might say, wait a minute, what about all the numbers? Those of you out there who are number crunchers, who want to know, what's the real value of the company? What's this? What's that? All those things can sure matter, but you need to make sure that you actually, besides seeing if the weather's nice, if you're going to a nice location, okay, giving you an analogy here, you want to make sure you have a roadmap to actually get there. The last thing you want to do is buy a good company at its all-time high or sell at its all-time low. Okay, being able to read a stock chart is so helpful in keeping you from making just silly, ridiculous mistakes, regardless of how good or even how bad a company is. So you want to pay attention to that. Now, let's continue to look through what's going on in the charts. We are still in a confirmed up move on the SPY, Standard & Poor's 500, on both the 4-hour chart, the half-day chart, and the two-day chart, although it does look like the half-day chart is also, just like the total market, getting long in the tooth on that up move. What do we see going on? You see it even more so as we get into the Qs, which is the NASDAQ 100, still confirmed up moves. Derivative oscillators falling off just a little bit of its high over the last many, many weeks. What do we see going on? Well, it crossed over around the 18th, moving up on the two-day chart. That is the NASDAQ 100. Still have a good, strong two-day trend line. However, the Qs, the NASDAQ 100, was down today 0.61%. So it was down significantly today. And if significantly, I take that back. That's not a significant down. It was down significantly more than the 0.08 and the 0.06, 10 times more than the 0.06 of the total market. But again, only 0.61%, okay? Just over 0.5%. Now, if we drop back and look, though, at what do we see going on intraday on the half-day chart, we do see, significant down candles. Again, this is the short chart and a crossover going down. What does that mean? It means that maybe we're going to see a good pullback where we might test the 2-day trend line or even go through it. And maybe the market will end up gaining a little more steam going up, and we might be able to get into an up move. Of course, we're not going to get into an up move when it's just crossed over going down, but if it crosses back over, like it did on the 12th of February, of February, we see that kind of crossover. If we see that in the next few days going up, then we may very well jump in. But what we're looking for is a good trend on the big chart. I want you to understand this. This is so key. A good trend on the big chart like we have here. Then we want to see on the small chart a pullback on the 4-hour chart, such as around the 3rd of February. And then let the market tick down for a while and then take off again going up. Now, it may not do that, but if it does, and you're able to find a buy-in point when the market's going back in the direction of the big chart, small chart going back in the direction of the big chart, that's when it is typically safest. And again, this is for you to experiment with. We're all about doing virtual trades. We're not giving you trading advice here. We're not paid for that. We're not paid anything. We're not a stock calling service. We're an education company, and we're trying to educate you doing virtual trades, figuring out how to read these charts and how to make it work for you. Develop your own individualized method. Once you do that and it works for you, do it. Do it again and again and again. Once you get it down and it really works, then you can decide, only you can decide when to spend your own money. But in the meantime, go ahead and pay attention to what we're talking about. Try virtual trades. Go to any of the online brokerage firms, set up a virtual trading account, become a virtual millionaire, then start trading it and see if you can become a virtual multimillionaire. When you do that, maybe you'll be a lot more confident. You should be about being able to get out there and use real money, but that's for you to make the decision on, not for us. It's your money. You need to figure out how to first preserve it and then make it worth even more. So still above the 2-day trend line on the 4-hour chart, but it has crossed over going down. Let's look for, after this pullback, perhaps another move up, and we can jump in at that point in a virtual trade. Now, lastly, going to range back out to our 2-day chart. Take a look at gold. Gold was up 0.52% for the day. We got a 2-day trend line that gold has moved well above, and we still are in the negative on the derivative oscillator. Interesting, but we are on the positive as far as the crossover going all the way back to December the 16th when gold crossed over going up. Gold has made substantial climbs there at the end of January, beginning of February, then sort of tacked along, still in an upward momentum, and has climbed a lot over the last two-day candles. Now let's take a look at what we've seen happen. And some of you contacted me doing virtual trades on gold when we had the crossover back on the 3rd of March. You've done pretty well so far, haven't you? You jumped in early. You've seen gold go from a low of 118.42 to a high of 122.37. That's not too bad, but look at what gold is doing now. It was technically up for the day, 0.52%, primarily in the morning. Bit of a rollback in the afternoon. Continue to watch. We do see the derivative oscillator losing a little bit of its speed, and we're still about where we were over the last couple of days with the 4-hour MACD and the signal line. So be careful. Just continue to watch. The last candle we got was a doji, meaning lots of indecision. So still in a confirmed up move on the big chart, still above the 2-day trend line. Be careful if you jumped in around the 3rd, and hopefully you've made some money. Maybe you've sold some of your position. Maybe you're still in. Just watch. Don't want to lose what you got. That is where we are at the end of the day on Monday, the 7th of March, as we go into Tuesday, the 8th. Thanks so much for joining us. from chartingwealth.com.